Hello friends, yesterday we have seen sum number 11 and previous to that we have seen till sum number 13. Now we are going for sum number 14. Okay, page number 83, sum number 14. Dharma and Karma are partners sharing profit and loss in capital ratio. Means their capital ratio is their P&L ratio itself, but always it is not applicable. Here in this, it is a special case that Dharma and Karma are sharing their profit and loss in their capital ratio. Now their capital is 140 and 120. If we will do half of it, 14 and 12 is half. Then 14's half is 7, 12's half is 6. So what is the ratio? 7:6. Drawings Dharam Karam, opening stock, purchase, goods return credit. Now goods return credit means sales return right there. Goods return credit in the bracket, sales return or SR. In the same way, goods return debit, then purchase. Receivables means debtors. Then salary up to 28 to 17. Tick that and hidden adjustment because our year completes on 31st March. Salary is paid till 28 February. So 1 month salary is outstanding. Tick that. Machinery. Depreciation on machinery. Now if depreciation is given simply, then it is P&L debit. Okay. If it is given without adjustment. Building, wages, insurance premium, discount allowed, interest on loan. So tick that as a hidden adjustment because loan of Dharma is given in the liability side. Okay. Furniture, stationery expense, advertisement expense, cash balance, current account Dharma. Okay, we will have to prepare current account. Capital accounts, sales, goods return debit means right there purchase returns. Payables means creditors. Now there is a mistake in the book. Everyone's book it is written salary outstanding, but right there wages outstanding. What you will write instead of salary outstanding? Wages outstanding. And as this is given in the adjustment only, as this is given in the trial balance and not given in adjustments only, single effect on liability side. Loan of Dharma tick as an hidden adjustment. Discount received, bank overdraft, current account Karma. Closing stock is of 21,000 in which stationery stock of 2,000 is included. So what we have to do, first time closing stock is given as an adjustment. So closing stock will have two effects. But see friends, total stock is 21,000. In that from 21,000, 2,000 is stationery stock. So first tick on stationery expense, stationery's closing stock will be subtracted and shown on the asset side as we have seen in our group 1. Now from 21,000, 2,000 is stationery, so 19,000 is trading accounts closing stock, and that will be shown trading credit and asset side. On machinery, depreciation is to be increased up to 10%. Now this sum is like 13 sum, where interest on capital is given and we need to calculate. So in the same way here also the same thing is given. Okay? Yes. Now, so tick on machinery and depreciation of machinery. Okay? So tick on machinery and depreciation of machinery number 2. Now number 3, tick it as IMP because this is most important. Credit sales of 1,000 is recorded in purchase returns book by mistake. Now this is a type of rectification adjustment, but what we have seen is the different types. Sales is recorded to purchase, purchase is recorded to sales, purchase returns recorded to sales, sales return recorded to purchase. But this is a different thing. Here sales is by mistakenly returned to purchase return. So this type of adjustment we have not seen. Now for that we need to understand. Actually it was sales, and where it is written to purchase return, but don't tick to purchase return. Tick to purchase. Don't tick to purchase return. Don't make any change in purchase return, because it is possible that in sometimes this same adjustment is given and purchase return cannot be given also, and only we are deducting purchase return from purchases only. So friends, for this transaction tick on purchase number 3, then payables means creditors number 3. After that tick on sales number 3 and tick on receivables, that is debtors number 3. So it will affect four things. So purchase and payables means purchase and creditors, sales and receivables means sales and debtors. Now friends, I may explain one thing. Actually they are sales and they are written in purchase returns. So what is the effect? Now friends, normally if we are telling that if purchase returns is increasing, Means if there are purchase returns, what you are doing, you are subtracting from sales. Sorry, you are subtracting from purchases. Means if the purchase returns is increasing, you are subtracting from purchases. So it has an opposite relation. Why? Purchase return increase, purchase decrease. Now here opposite effect will be shown. Here actually it was sales and recorded to purchase returns, so purchase returns will decrease. So when there is decrease in purchase returns, purchases will increase. So we will add to purchase and we will add to creditors. Now actually they were sales, so we will add to sales, we will add to debtors. But for that you need one relation which I am giving one. And before that fourth adjustment you please tick. 1/4 of advertisement expense is to be carried forward to next year. Now write in the bracket 1/4 advance. This is just to confuse you, transferred to next year, but this is just to confuse you only. 1/4 of advertisement expense carried forward to next year means write in the bracket 1/4 advance or 1/4 prepaid and tick to advertisement number 4. Now write one important concept for this sum and for every sum. So don't write any sum number now. Only just write heading important note. Relation between sales and sales returns, comma, purchase and purchase returns. Relation. Opposite or inverse. Means the relation between sales and sales return is inverse, purchase and purchase returns is inverse. Inverse means if one is increasing, other is decreasing. If one is decreasing, other will be increase. Which means purchase returns decrease, down arrow means decrease, is equals to purchase increase, that is plus. Purchase returns increase, purchase decrease, that not work. This we do normally. Whenever purchase returns are given, what we are doing? We are subtracting from purchase. And what is given in this sum? By mistake, purchase returns were recorded. So by mistake means purchase returns are more, we should do it less. So purchase returns will decrease and purchase will be added. In the same way, sales return decrease, sales increase, plus and sales return increase, sales decrease. So what is given in this sum is this concept. By mistake, credit sales are recorded to purchase returns. So purchase returns are recorded wrongly. So it will decrease that. So purchase return will increase. So we have to add it to purchase. So purchase plus, if we are adding to purchase, then creditor plus. Moreover, actually they are sales. So sales plus, debtors plus. And all these three are additional things. So write this thing and after that we have start the sum. Okay, now we are starting the sum. Okay. Trading account of partnership firm for year ended as on 31/3/17, which is for 8 lines. debit, credit. After that, P&L account of partnership firm for year ended as on 31/3/17, rowing for 20 lines. After that, P&L appropriation account of partnership firm for year ended as on 31/3/17 for 6 lines. Debit, credit. So 8/26. Partners capital account for 3 lines. Date, particulars, dharma, karma. Date, particulars, dharma, karma. Next, partners current account for 6 lines. Date, particulars, dharma, karma. Date, particulars, dharma, karma. Last, balance sheet of partnership firm as on 31/3/17 for 20 lines. Liabilities amount, assets amount. Friends, the account drawing is over. Now we are starting the sum. First we are starting with the opening balance of capital and current account, and then we are leaving the necessary space wherever required. So we are starting with the opening balance of capital account on 1/4/16. By balance brought down 1,40,000, 1,20,000. Okay, opening balance of capital account. Now opening balance of current account. Dharma has 17,000 debit. 1/4/16. To balance brought down. Dharma has a debit balance of 17,000. Karma has no debit, it has credit. So by balance brought down of karma we have 14,000 credit. After that, leave one line here for opening stock. two lines here for profits, and start the sum. Drawings dharma and karma. So when we have both, drawings are shown on the debit side of current account. 1/4/16 to drawings account. Dharma 7,500, karma 5,000. Then we are having opening stock. Opening stock is debit of trading. So first line itself, to opening stock 15,000. After that we are having purchase. Purchase is debit of trading to purchase in the inner column 80,000. Now friends, we are having one adjustment and one purchase return, so leave 4 lines. Why 4 lines? One is the adjustment, one is the purchase return. So after purchase leave 4 lines. Then we have goods return credit, means we have sales return. So for that we need sales. So buy sales. Don't skip this, just write. Whenever we are not having sales, please write it. So sales in the inner column 1,20,000 minus SR means sales return, which is goods return credit 3,000. See, SR means sales return, it is goods return credit. So in the inner column itself 1,17,000. Now leave 1 line, because in sales we have one adjustment, so 1 line is enough. What I have done, whenever we are doing after purchase, we are having sales return, but sales return we need sales, so we have written sales. We have subtracted sales return, that is goods return credit of 3,000, and we have left 1 line for the adjustment. Then we are having receivables. Receivables means debtors. Debtors are our assets. So receivables in the inner column and in bracket we will write debtors 27,400. We are having one adjustment, so 1 line. Then we are having salary. So salary is P&L debit. So on the debit side, to salary in the inner column 13,200. It has an hidden adjustment. So in calculation number 1, outstanding salary. Why outstanding salary only? Because year ends on 31/3. Salary is paid till 28 Feb. Year ends on 31/3/17. Salary paid up to 28 to 70. So 1 month outstanding. But how to know what is the per month salary? Looking at the amount 13,200, it is paid till 28 February and 1 month outstanding, so it is 11 months salary. For monthly salary is equals to 13,200, it is of 11 months, divided by 11 months, which comes to, I think, 1200. 13,200 upon 11 is 1200 per month. And the outstanding is also of 1 month, so outstanding salary is 1200 itself. But if 2 months, then 1200 into 2. But here 1 month is outstanding. Therefore, outstanding salary is equals to 1200 into 1 is equals to 1200. Why into 1? 1 month. Okay. How to know? Year ends on 31/3. Salary is paid up to 28 Feb. For monthly salary, 13,200 is till 28 February, so of 11 months. So divide by 11 months is 1200 per month. So outstanding salary is 1200 into 1, because 1 month. 2 months then 2, 3 months then 3. Outstanding is plus. So plus outstanding 1200 in the outer column 14,400. Debit side plus means debit, other is credit, means on the liability side after leaving after leaving 7 lines or 8 lines, outstanding salary in the outer column 1200. Next, machinery. Machinery is our asset. So on the asset side, $71,760. We have an adjustment in one line. Then depreciation on one machine. Depreciation is only shown on P&L account to depreciation on machine. But friends, what is one thing which is to be remembered? Depreciation is given and we need to calculate also. So do what we have done here. No name is required directly. Given plus additional is equals to total. Given depreciation is 6240 plus an additional. Additional will have two effects. Remember in sum number 13 also same thing was. Then billing. Billing is our asset. So on asset side, billing in the outer column 80,000. Next, wages. Wages is the expense of trading account. So in the trading account, after purchase we have 4 lines and directly next line to wages in the outer column 1600. Then we have insurance premium. It is our expense. So P&L debit to insurance premium in the outer column 1800. Next we have discount allowed. It is also expense. So to discount allowed in the outer column itself 3200. Next we have interest on loan. So interest on loan is given and we need to calculate also. To interest on loan, the same thing, given plus additional is equals to total. Now the given interest is 1200 plus and the remaining. So in calculation number 2, for interest on loan, first we need to write the loan. Loan of Therma. Loan of Therma, sorry, not Therma, of Therma. Sorry, it is Therma only, it is by mistake. Loan of Therma 30,000. See friends, again I will repeat. For interest on loan, given is 1200. For that, first write the loan. Only after that we can understand in the inner column because additional interest is given. So here we will write interest on loan of Therma. No date is given. So for 12 months for 1 year. Now interest is equals to 30,000 into 6%. It is 1800. Why no months have been written? Because it is from one. No date is given, so it is from the starting. So directly 6%. So 1800. Now do this thing only. Given plus additional is equals to total. Given is 1200, total interest is 1800, so what is the additional? 600. Now as you know, this will have only one effect, this will have. These things I don't need to clear it again because already we have seen in the previous terms also that given is one effect and additional is 2 effect. So plus 600 directly in the outer column 1800, here plus additional interest 600, so in the outer column 30,600. Again I will repeat, interest on loan is given and check whether loan is given or not. Loan is given, so in the sum also you need to check. So write always given plus additional is equals to total. Interest will be always less only. So calculate. As no date is given, directly 30,000, 6% is 1800, total is 18, given is 1200, so additional additional is 600. Additional has two effects, given has only one effect. So here plus 600, there also we have it. Okay. Next, furniture is our asset. Furniture in the outer column 87,000. Next we have stationery expense is our expense, but it has an adjustment. In the inner column 7,000, leaving one line. Again, advertisement expense, it also has an adjustment 36,000, leaving one line. Next, cash balance is our asset. 51,200. This I will little bit leave the space and write. To advertisement expense 36,000. Okay, I have not left the space. And last is current account done, that is written. Again we are seeing all the debit balance. We have started from the opening balance of capital, then debit balance of current and credit balance of current. After that we have started all the debit balance, that is first is drawing, so current debit, opening stock is trading account debit, purchase is also trading account debit, one purchase return and one adjustment, so 4 lines. Goods return credit means sales return, for that we have written sales, subtracted sales return, written the total inside and one adjustment, so 1 line. Receivables are debtors, so on the asset side leaving 1 line. Salary is for written adjustment, so 1 month salary was outstanding plus outstanding, and here we have written. Machinery is our asset. Depreciation on machinery is given and calculated, so cost effect here, then given plus additional total, and here left one space. Building is our asset, so on the asset side, wages are our expense of trading account, insurance premium is the expense of P&L account. Okay, insurance is little bit slanting, here it should be written 18. Okay. Then discount allowed is our expense. Interest on loan, loan is given and interest is given, so first we have checked the total is 1800, so given was 1200, additional 600 to effect with the loan. Furniture is our asset. Stationery expense and advertisement expense both have an adjustment, so inside cash balance is our assets, so on the assets. Now we are moving forward the credit balance. Capital is already written, sales is already written. Now goods return debit means purchase returns, which is subtracted from purchase. So minus PR, purchase returns 2000. In the inner column itself, we will show 78,000, and then we have the space for adjustment. Now payables means creditors, which is on liability side. It has an adjustment. Payables means creditors in the inner column 79,000 and leaving one line. Then we have, instead of salary outstanding, wages outstanding. Please you correct your book, okay? Outstanding wages, it is not outstanding salary. 700 in the liability side, because outstanding advance receivable, if it is given directly in trial balance, if it is credit then liability, debit then asset. Remember that thing. Then we have loan of dharma, we have already written. Then we have discount received, which is our income. So credit side, after leaving 2 lines, by discount received. Income is 6600. Next, bank overdraft is our liability. So on the liability side, bank OD. The amount is 2,800. Okay. And last, current account, karma, we have already written. Again I will repeat, opening balance of capital is written, then sales is written. on the credit side. Then goods return debit means purchase return, subtract from purchase. Payables means creditors, it has an adjustment, so one line. Instead of salary outstanding, we have outstanding wages, so on the liability side itself. Then loan of Dharma is already written, its adjustment is solved. Discount received is on the credit side, it is the income of P&L account. Bank overdraft is the liability, so liability side. And last current account Dharma is already written. Now moving forwards, the first adjustment, that is for calculation number 3, heading I am giving as stock. In total we have 21,000 of closing stock, which includes 2,000 for stationery stock. So total closing stock 21,000. It has two parts. 2,000 stationery stock. Now 21,000 has 2,000 stationery stock. So first give effect for stationery stock. So whenever we have two types of stock. Closing stock is trading credit and asset. But if we are having stationery stock or any other stock, subtract from that expense. So minus stationery stock. We have already learnt in our adjustment 2,000. So in the outer column we have 5,000. Next, all the stocks are on asset side itself. So stationery stock 2,000. What I have done, total stock is in the first adjustment 21,000. It has 2,000 stationery stock. So subtract from stationery expense and show it on asset side. All the stocks are on asset side. Now remaining 19,000 is goods stock. Remaining 19,000 is goods stock, which is closing stock of trading account. So after leaving one line, by closing stock and in bracket goods 19,000. Don't write 21,000 by mistake. And all the stocks are on asset side also. So closing stock 19,000 and in bracket I will write goods. Again I will repeat. 21,000 is total stock. 2,000 is stationery stock, so subtracting from stationery expense and writing the remaining amount outside. Now remaining 19,000 is the goods stock, that is of trading account, so trading credit and assets. Now friends, next. Second adjustment is also important. On machinery, depreciation is to be increased up to 10%. How to solve this adjustment? So whenever we are having such a thing, listen here. Calculation number 5. I think it is 5 or 4. You decide that numbers. Depreciation on machinery. Rate is to be increased up to 10%. Now when such adjustment is given and also some depreciation is given, how to calculate? Add the given depreciation and then calculate based on percentage. If such adjustment is given, rate is increased or that, then what to do? Add the given depreciation. Given depreciation is 6240 and then calculate based on percentage. So machinery is 71,760. Add the given depreciation plus given depreciation 6240. Machinery total 71760 plus 6240 is 78,000. Now calculate based based on percentage. Minus depreciation 10% is 7800. So the depreciation is 7800. Remaining amount don't decide. Now write here. Given plus additional is equals to total. Given is 6240, total is 7800, so additional 1560. Additional depreciation is 1560. So in this way, this is the method to calculate the additional depreciation. What to do when such adjustment is given? When some depreciation is given and something need to calculate, then add the given depreciation. In machinery's balance, add the given depreciation, so machinery will be total. Then take the percentage, then to 10%, so 7800. So 7800 is the total. Given is 6240, so 1560 is the additional. So this will have one effect which is already given. This will have two effects. So plus 1560, so directly in the outer column 7800, and here minus depreciation, and in bracket we will write additional 1560. So in the outer column 71760 minus 1560 is 70,200. 70,000. Okay, additional has two effect and given has only one. Now next, credit sales is recorded to purchase return by mistake. Now we will give its effect. Credit sales recorded to purchase returns. Now for that, purchase returns decreases and sales increases. Now purchase return will decrease is equals to purchase increases. This thing only is to be understood. Just before starting the sum, I have given the rules also, that if the purchase returns are decreasing, then purchase will increase. So if the returns are decreasing, then purchase or sales will increase only. You have to understand that thing only. What adjustment is given here? Here actually they are credit sales and recorded to purchase returns. So purchase returns are wrongly written. So purchase return will decrease, so purchase will increase. So purchase plus creditors plus, and actually sales will increase. So sales plus debtors plus. Only this effect is to be. So plus purchase returns, sorry, not purchase returns, sales recorded to purchase returns. What you will write? Sales REC recorded to PR means purchase returns 1000, in the outer column 79,000. Same thing is to be written here. Sales recorded to purchase returns 1000, so in the outer column 80,000. See friends, actually purchase return is decreasing, but what it will affect to purchase, it will increase the purchase. So sales is, so it is added sales recorded to purchase returns 1000, sales recorded to purchase return 1000. Now actually it is sales, so we will write plus unrecorded sales 1000, in the outer column 1,18,000. What you will write in the sales? Plus UN REC sale means unrecorded sales 1000, so 1,18,000. In the receivables or debtors also plus unrecorded sales 1000. So in the outer column 28,400. Okay. Now next, last adjustment. 1/4 of advertisement is to be transferred to next year, means it is advance. Advertisement expense 1/4 is advance, nothing else. Okay. So no calculation is to be done. Fine. Simply we can do it. So when it is advance or prepaid, we are subtracting minus 1/4 part ADV minus 1/4 part ADV means advance. So 36,000 into 1/4 is 9,000. 36,000 into 1/4. If you want, you can use one more line. In the outer column, it will be 27,000. Debit side minus means credit. If one is credit, another is debit. Advance advertisement expense in bracket 1/4 9,000. Okay. What I have done, minus 1/4 part ADV means advance 9,000. How? 36,000 into 1/4 27,000 and then. Okay. So everything is completed. Now closing the sum. 1,18,000 plus 19,000 137. 1,37,000. 1,37,000 minus 15,000 minus 79,000 minus 1,600 41,400 to gross profit. Okay, here by gross profit 41,400. Now friends, yesterday's sum, this debit was more, so please check if debit side is more or not. 14,400, 7,800, 1,800, 3,200, 1,800, 5,000, 27,000. This is more. Okay, this side is more because so much amount is written and this much amount is not there. So today also debit side is more, 61,000. Normally credit is more, but today debit is more. 61,000 minus 41,400 and minus 66,100. So 13,000 is the loss by net loss. There are so much sums where only profit we are getting, but there are some special sums where debit side is more, so we are incurring loss. Again, nothing is here, so take this here. To net loss 13,000, close down 13,000, 13,000. We will have 13,000. Now this 13,000 is divisible loss. Now this divisible loss is in the ratio of 7:6. Why 7:6? It is in capital ratio. If we want, we can calculate capital ratio also. We have not calculated this capital ratio. So in next calculation, P&L ratio is equals to capital ratio. So dharma is D, karma is K. One's capital is 1,40,000, the other's capital is 1,20,000. If we are cutting the 0, 14:12. If we are taking it by 2, then 7:6. Dharma and karma, 13,000 in 7:6. Now see, 13,000 divided by 13. Why 13? 7:6. So 13,000 divided by 13. Why divided by 13? 7 plus 6. Multiply 7 is 7,000 is equals to 6 is equals to, so 6,000. How we get? Again I repeat, 13,000 was the loss. Divide by 13 because 7 plus 6 13. Multiply 7, so 7,000 equals to 6 equals to 6,000. Here it is credited, here it is debited on 31/3/17 to divisible loss 7,000, 6,000. Now first just close these capital accounts by double line, and 31,370 to balance carried down. This is credit balance. 1,40,000 double line, 1,20,000 also double line. Credit balances are on liability side, so capital, dharma, karma. 1,40,000, 1,20,000. Now let's close the current account. Now see, dharma has nothing on credit, so his debit is more. 17,000, 7,500 and 7,000 is 31,500. So here I will write 31,500, balance is 31,500 on 31,370 by balance carried down. Now as this balance is on credit side, it is debit balance. Now for karma, 5 plus 6, 11 on debit, 14 on credit, so 14. Credit side is more, 14,000, 14,000. Now from 14,000 minus 5,000 minus 6,000, so 3,000. So karma is having credit balance. To balance carried down, credit balance on 31,370. Again I will see, dharma is total on debit side, so credit side is less, so credit side it is debit balance. Karma has on credit side more, so debit side we have balance, it is credit balance. Now credit balance on liability side, don't make mistake, credit balance on liability side, so current account karma, most of you will make mistake like this only. See, debit side balance means credit balance on liability karma 3,000. And credit side balance means debit balance, so it is on asset side. Current account dharma. And how much? 31,500. Now let's check. 140, 120, 3,000, 1,200, 3,600, 80,000, 700 and 2,800. 3,78,300. 28,400, 70,200, 80,000, 87,000, 51,200, 2,000, 19,000, 9,000, 31,500 is same. 3,78,300. So friends, this is the sum. That's all for today. Thank you so much.